jobs report for March came in much stronger than expected. The US economy added 178,000 jobs, and the unemployment rate eased just a tad to 4.3%. It's a rebound from the brutal February, but even the initial number was revised, 130,000 jobs. It's still too early to factor in the war and how it's going to affect the labour market, and the spike in oil will raise costs. The economist Paul Krugman says rising gas prices are only the beginning of the half the story. The Nobel Prize winner says other energy-related costs are surging even more. Diesel, for instance, used by trucks, is up nearly 50% since the war began, according to the AAA. And according to Paul, the fertilizer is also becoming more expensive. Its production relies on natural gas, plastics, another petroleum product getting more expensive. Paul Krugman is with me from New York. The input costs, as I believe is how we like to talk about these sort of fertilizer, the diesel, and all these other things, the plastics. Are they at a rate of increase that you would expect to see them transmit into the wider economy, or can they be contained up to a point?
Oh, I think this is clearly large enough to hit the wider economy. This is, a little bit less than half of the oil consumption in the U.S. is gasoline. Diesel is less than half as big, but the price of diesel, if you look at it as dollars per gallon, it's up around 70% more than the price of gasoline. So, and then these other things, there's also jet fuel in there, there's fertilizer, there's petrochemicals. The overall impact there is really, we're talking about a significant fraction of 1% of GDP in terms of increased input costs. There's no way that something that big is not going to be passed on to consumers. It's not going to affect business hiring and investment decisions. So this is a further ugliness to the energy crisis.
Are we at the tricky point 5 weeks in? This is the bit where, what I've been told is where it starts to get really dangerous, because until now, if it reversed, the war was over, prices came back down, there wouldn't be much of an effect. But 5 weeks on, and we are really now talking about real effects.
Well, even if the war had ended sooner, we would have some significant effects, because there's oil that will never be produced because of the effects of the war and so on. But now we're at a situation where, it stops being financial and starts becoming physical, just about now. Until now, oil was still arriving from the Strait of Hormuz in Asia and Europe because it takes time in transit. That has ended for Asia. It's trickling. It's tapering off for Europe. So all of a sudden now we're actually talking about a shortage of not a financial speculation that things
Right.
will go bad, but an actual shortage of barrels of oil. And we're starting to hear the prices that you hear for oil. Those are actually futures prices. They're not cash on the barrel, right?
Right.
They're prices for you buying a barrel sometime, in a month or more from now. And the data are not great, but the actual spot prices of physical crude oil are substantially higher than the futures prices you see there. I've been hearing numbers like $140 a barrel. So this is getting, seriously real, and it's going to. We're at the point where this starts to become something more than just headlines about high energy prices.
The fascinating part about it from the US point of view is the US doesn't, as the president's reminded us on numerous occasions, doesn't import much from the Gulf. It does, of course, import quite a bit from Canada. And because of the pricing of energy, which is based on the global price, it is being affected. So when the president says, to Europe, come and buy more of our oil, come and buy more of our LNG. Firstly, I don't believe there's that much surplus that can be sold out and exported.
Yeah, and also, when he says we aren't affected, I kind of want to say, what do you mean, we white men? Yes, there oil producers in the Permian Basin in Texas are doing very well. Consumers everywhere else in the country are doing badly. There is no mechanism to transfer the
Right.
windfall profits of the oil industry to ordinary households. And in fact, I mean, it's a kind of a trivial point, but add to it, this shows up as profits of oil companies. We don't know exactly who owns these companies, but on average, something like 35 or 40% of U.S. stocks are foreign owned. So these windfall profits, when you say they're accruing to America, well, not exactly, and
Would
certainly
you?
not to you and me.
You just give me, hearing your answer gives me a thought. Would you be in favour, because of that, of some windfall tax, a one-off or whatever, because these companies are making so much more, and it is going to have to offset the costs of assistance to others? Is it possible, do you think, I mean, it's been done before, a windfall tax?
Yeah, it's been done before, and now in the '70s we had first price controls, which didn't work so well, and then there was a windfall tax that was imposed as the price controls were lifted, which in the '80s, which ended up being kind of a moot point because the price of oil collapsed soon afterwards. But there certainly is a case for it. It's interesting. Many governments out there do essentially collect oil price windfalls. Among them, the government of Russia. This is not a big windfall profit to Russian oil producers. There's some, but a lot of Russia basically has what amounts to an excess profits tax, which is why Putin is celebrating about this war. The United States doesn't have anything like that,
Yeah.
and we really should, given that the conflict of interest between in a crisis like this between
So,
consumers and a real handful.
So, as this inflationary hit goes through the economy, do you think the Fed stays its hand, just does nothing until it absolutely has to, even though the inflation will hit 4%, the political and/or the reputational cost of putting it up? You hold your nose and just hope it doesn't go further.
Well, the Fed normally looks at core inflation, which excludes food and energy. And that means that the price of gasoline is not going to enter the measure they normally look at. And they have in the past been adamant about looking through shocks to the price of gasoline, basically. But one of the things about this surge in the cost of diesel and the cost of petrochemicals is that that's going to show up in core inflation. And I don't know how long the Fed will wait. They will certainly wait to see until whether this passes, and especially given all of the hysterical yelling that was happening just the other day from the White House demanding that they slash rates, they'll really have to swallow hard before raising rates. But on the other hand, everybody's thinking, is this the '70s again? And I don't think it is, and the Fed doesn't think it is. But how much do you want to wager on that?
That's the core point. Why wait and discover it? Paul, I'm grateful. Have a lovely weekend. Thank you for taking time to talk to us tonight
Same to
on
you.
Quest Visitors. Thank you, sir.